Welcome back to an updated chart on the MICROe-MINI. I've added how I'm going to color code the cycles for Elliott wave. This isn't really the normal way to label Elliott wave theory waves, but for this platform it's easier, and I think it's easier to read, to be honest, so we're going to color code it instead. So you can see here we're starting with the super cycle, which is in red. I have it at W. Cycle is in purple. I have it here. Primary is blue, which is indicated here. Intermediate, yellow, right here. Minor is in white, which you'll see on the 4-hour, and along with the MIUTE green. You'll see that in the 4-hour and the 30-minute time frames. Right now I just want to recap the how I'm going to count this. I went ahead and labeled this as a WXY. I'm starting to think that I have an argument that I can count any chart in 3 ways. But yeah, I'll try to make that counter argument later down the road. But anyway, so yeah, we'll just label this W for now. But the most important labelings are that you need to know that we've completed an A down starting in December 21, and we ended on October 1st, 22. And since October of 22, we have been in an uptrend, and it's we're correcting up, and I believe this is a B wave up. Looking for a turn relatively soon for a bigger C. So I don't know yet if this is going to be just an A, B, C, and then when that completes, we work on a Y leg up. But some X patterns can move sideways as an A, B, C, D, E pattern, and then start to move up. And that's really what I'm leaning towards. But we won't too far down the road to know, or too early to tell me. So let's move into the daily time frame, and just start where we left off last time. So I think we were about just finishing up the trading day here on October 14th, and you can see on the 15th that this is where, yeah, so we ended on October 14th. So from here over, from October 15th, 16th, 17th, and 18th, these are new candles that have formed since last video. Yeah, just 4 candlesticks. So you can see you had a bearish engulfing. Okay, that means that the next day pretty much gave back all the gains that was created on October 14th. So this is called a bearish engulfing candlestick, which didn't really play out the next day because it started to turn up. So yeah, the next day after that, you really just got about a 50% retracement. And even in this day, on the 16th, you could say that it's still kind of a continuation of a downtrend. So people probably were still playing it a little short on this. But you can see here on the 17th, it just spiked up, went past the 14th high, and then just came right back down. Now this candlestick is actually a reversal candlestick. I think it's called a hammer, or a reverse hammer. I'm not real sure, to be honest. I don't weigh too heavy on the names of the candlesticks, but I do know it's a reversal, and that's really what is important, I guess, to know if you're into just reading candlesticks. So that being said, this being a reversal, you would anticipate the next day to be to turn down. It did. So Here you have the bearish engulfing pattern that you expect for a downturn. Didn't quite happen. Still retraced 50%. Still have a case for the bears. Didn't happen. Now you got this reversal. That's a case for the bears. It didn't happen. So here we are with a bullish candle near the all-time high. 59, what is that? 59.18. And we closed on the 18th at 58.89. No, I'm sorry. Closed at 59.07. So just a few points off the high. Now we have a case for the bulls, because if you're like patterns, this is a bull flag. Well, it's a rising wedge, really, but some will still call it a bull pennant, maybe. I could be wrong on that, but I do know it's a rising wedge, and typically those tend to break to the downside. So I guess really it would be more of a case for the bears now that I think about it. But as far as patterns go, it can go one way or the other. So basically, if you play this on patterns, you say, well, if price breaks out on this trend line, then it's bullish. If price breaks out down here, then it's bearish. But I don't do that, so I'm not going to worry about it on this channel. So this is where we're at. But speaking of trend lines, let's go down to the 4-hour time frame now. So if you recall, on the monthly time frame, I showed you the A wave down. I'll show it to you real quick. A wave down here, and we're correcting up for a B wave. And here is the end of that B wave, I believe. Right here. Okay. Maybe here, but I think it's right here. I did the counts. I think it's another expanding flat, but doesn't really matter too much. So we're down in 3. 1, 2, 3. Okay, for a intermediate, I believe, A, and then an intermediate triangle. And I have it labeled in the MIUTE. You can barely see it's in green. That's why I color coded and a little easier to see, I think. So we have an A up, a B, C, D, and we're trying to finish this E. And remember, E's can be a little tricky. They can start to simulate like a 5-wave structure of some sort. So I drew these orange trend lines because they do play a part when you're in triangles. And as long as you can label them and have the counts, then I don't mind using these trend lines, because it does play out. I put this extra one on top just to kind of use as support or resistance later on, and it's just in case that this whole thing is part of an A, B, C, D, E pattern, some kind of triangle, and I miscount. Maybe I should have started it here, labeled this A, B, C, D, E or something, but that's why I put the orange trend line there. But right now I want to focus on this trend line and this one, because I think that's part of this B wave here. So it would be like a intermediate A, B, and then we start to head down for the intermediate C. So now we can go into the 30-minute time frame. And I've noticed the arcs in the time spirals here. You can see how they're matching up on the turns. Okay, I'm not going to focus too much on the time spirals and the arcs. I'll just do that on a separate channel. So I just want you to understand the wave counts. So let's go to the 30-minute time frame. Okay, so is your C, D, and starting the E trend up. Actually, I think it's right here, not here, but here. So I've got same thing, I think, as what I counted, is how we started this whole triangle was, let's see here, don't have it up at the moment, maybe it's from here. Yeah, I think it's this 161.8. So right here is where E ended. So this is what I'm thinking. Let me go ahead and copy this, duplicate that, push this up. Make this our E. I think E ended right here. And now it's almost the same pattern on a smaller scale on how we started this whole last portion move here on the 4 hour. See this? Comes down in 3 and then it starts to move up in a triangle form, and then I'm expecting the C wave down. It's the same pattern. 30-minute time frame. See this? The only difference is that it's not really a triangle. So this could be an ending diagonal right here, and those are counted actually in 5s, but still 3s. I'll get into that again in other videos, instructional videos. So it's be a 1, 2, 3, 4, 5. So this would be down in A, up in B, which I believe is still 2-part. I think it's an A, B, C, but yeah. I already did the calculations with the fib, so it's A, B, and I think this is going to be a 1, 2, 3, 4, 5 for C. Now, right here, if this is very tradable, because I would say that these new highs are your stop losses. Okay, I mean, I'd be expecting to break all these fibs, maybe hit this trend line on the bottom of our intermediate triangle, and so maybe bounce, hit up, hit one of these fibs here, or the arc, and just continue on down till we get target that was on the 4 hour, which is way down here at 52.02, which I think is going to go lower than that even. I think that's going to be maybe a trading range for a little while. So when it hits the 5200 mark, it kind of bounces around there, make another bounce up, you know, correct 50%, you know, let's say from up here at 5900 range. So it would maybe something like this, come down here, bounce up, and then down. So really kind of maybe a 3-way move. So you know, we'll kind of play it as it moves. But our first couple, you know, on Monday or Sunday, we'll know right away, I believe, whether or not that's going to be the case, because we got to have this zone right here act as resistance. Again, if it breaks it, I have this fib up here that it's probably going to react to, and so that could be very well the case, where it comes up here and then starts trailing down, and then this would be this 1, 2, 3, 4, 5 would be like a minuet count. So it'd be an A, B, and 1, 2, 3, 4, 5 up here for C, something like that, and then start. And that's a high probability that could happen, actually. So if I was to trade that, see, even the 161.8 is up here at 59.53, so it could go up a little higher than that. Maybe up to here or so, and then start trailing down. But I think you're going to have a heavy reaction if it tries to hit that. It's a 423.6 trend line, this red one. So that's why I think maybe they won't even reach the 161.8. So yeah, this is what I'm thinking going into tomorrow on Sunday on the micro. Now, for some reason, I feel like it could gap up too. So probably try to scare bears to get out of the position. So I could see it gapping up past this zone here, trying to get up here, and then all of a sudden breaks down. It could really, honestly, it could go all the way up to the 6,015 area and still be within a pattern of what I need for it to continue down. So, but I think these are highly unlikely targets. I think the more is closer to the, below the 6,000 level. So I think that is it. So I hope that helps, and good luck, and I'll try to update tomorrow.